What's going on, fellow investors? Wanted to make a very quick video here updating you guys on the 3 brand new stocks being added to the Dow Jones. So here on this green day, up almost $400, there was news that the Dow, which only has 30 stocks, that means that 3 of them are going to get the boot and then 3 of them are going to get added. Of course, that's going to cause a little bit of controversy, so we'll discuss that here. If you guys are unfamiliar with what the Dow Jones is, it's basically supposed to track the stock market index, measuring stock performance of some of the 30 largest companies listed on stock exchanges in the United States. So usually a big headliner that you see is, oh, the Dow is up 300 points, the Dow is down 300 points, everybody panic. So basically it gives an indication of how the market usually moves. So some of the bigger companies can easily sway how the market does for that day, whether it's going to be a green day or a red day. It's usually you can get a pretty good picture based on how some of these biggest companies are doing. However, one very big flaw of the Dow is that it takes into account share price rather than actual market cap. So a company like 3M is going to get 2 times the representation in the Dow over a company like Intel, despite Intel being actually 2 times as big of a company as 3M, with a 208 market cap here compared to 3M at just $94 billion. So 3M, just because of its share price being larger, it's going to get more representation, and that's a very big flaw that people often say about the Dow. But the Dow has been around since 1896, so I think it's been a pretty good metric to look at, and it's probably not going to be going away anytime soon. That doesn't necessarily mean that it is the best metric to look at to get a overall picture of the market for the day. And I'm not even going to try and explain the formula because it's super confusing. All I know is that E equals MC squared, and the end of the month equals QYLD dividends, which equals happy COTY. So the Dow does try to diversify in the industries that are included in it. Otherwise, we might have nothing but tech stocks. With Apple splitting its shares, the Dow is going to be losing some of that tech representation. Remember, because it goes by share price rather than market cap, that tech representation. So that's why they're bringing in fellow tech company Salesforce. So Salesforce is a cloud-based software company. It integrates customer relationship management, aka CRM, which is its ticker symbol. And it gives you all your departments, including marketing, sales, commerce, and service, in a single shared view for every customer. So I actually use a lot of Salesforce in my current role at my job, and it actually has a really nice interface. It's actually pretty easy to use, and there's lots of different departments that are easily able to view the information using this. This is something that definitely we're going to need more of in this digital world that we are in. This is definitely a growth stock. Just 3 years ago, they only had $8 billion in revenue, which means that they have now more than doubled that to $17 billion in their most recent fiscal year. Just look at this in the past 5 years, it's up 226%. So those are some great returns. I remember looking at the stock back when it was in the 140s, so it's amazing to see how much it's gone up, and I really do regret never buying into this with these returns, and probably is going to be poised to do even more, because I can't see the stock slowing down, especially anytime soon, especially with more people working from home in the foreseeable future. So Salesforce is replacing oil titan ExxonMobil, a stock that I currently own that has dropped tremendously as demand for oil has flattened due to the C-19 situation. And we can just see here that ExxonMobil currently has an 8.5% dividend yield, which is usually a major red flag that's a sign that a company is not going to be able to sustain that, or it's going to be cutting their dividend. And that could honestly still happen with Exxon. It actually hasn't raised its dividend yet this year, and that's going to end a very impressive dividend aristocrat streak if ExxonMobil is unable to raise that dividend. But I have a feeling that they're going to raise it by just like maybe a penny, and that way they can still keep their streak alive. So the next stock that got added was actually one of my favorite stocks, and that is Honeywell, and this is a diversified industrial company. So be sure to check out my full video analysis that I did on Honeywell, which goes way more in depth, and it tells you exactly why they are a fantastic dividend company. This is one that I'm already up on here, 20%, $169, and it pays a pretty nice dividend as well. So Honeywell They're all over your household, guys. It's in your appliances, air conditioning, fans, thermometers, heating and cooling systems, fire alarms, and so many more different departments. They're everywhere. They're also involved in aerospace, and the US government is one of their biggest customers. Honeywell has a double-digit growth rate in its dividend over the past 5 years, and it's on its way to becoming a dividend aristocrat. It still has not reached its pre-C19 levels yet, so with so much of the stock market possibly inflated and Honeywell trading at a 19 PE ratio right now, this might be one of the more reasonably priced stocks. Honeywell replaces the defensive contractor Raytheon Technologies. I was a little bit surprised by this because RTX is a newly formed company of United Technologies and Raytheon, and it's not exactly a bad company by any means. This is always going to be a polarizing sin stock or war stock since it's in the defensive industry, and I don't own it, but I'm pretty indifferent about it. But let me know if you think RTX was the right pick. I think people were a little bit more blindsided on this one being replaced. I personally would have thought that 3M would have been more of an apples to apples comparison, so I could have understood if 3M got the boot and Honeywell got in, but either way I'm happy Honeywell's in there, even though I own both Honeywell and 3M. All right, and then the last stock to get added was the biotech pharmaceutical drug maker Amgen. So this company has struggled recently with more biosimilars coming in. Basically, you guys know the drill. Once a company has an approved drug, they only have the exclusive rights or patent for that drug for so long before generics are legally allowed to come out. So it has so many drugs in its next phase 3 of testing that could eventually get approved, which means more sales for them in the immediate future. But of course, stuff like that is never guaranteed, as there's strict regulations for drugs to actually be approved and timetables for that. So this is a company that has done well during the C19. It's actually posted a positive earnings report, and you can see an increase in sales. Even during this pandemic, people will still need medication. And it's recently been growing its dividend very quickly, 19% in the past 5 years. That's very impressive. It has a 16.5 annual return these past 10 years, compared to the S&P 500, which has just 13%. The company that it replaces is Pfizer, and we're definitely going to miss Pfizer on the Dow, but I have a feeling it's going to reoccur in other parts of our lives, sometimes for short periods of time, or sometimes for long periods of times, which if it does, in that case, I suggest calling a doctor. So guys, being on the Dow, that has some great exposure, right? It's a great marketing for your company to know that you're among the most important companies in the world. There's ETFs that passively just put their money into these companies. So just let me know if you agree in the comments below with the choices on who got added and who got dropped. I know there's going to be a little bit of controversy on that, so I would love to hear your opinion. And let me know if you're buying any of these companies as well. I'm definitely going to be buying a few more shares of Honeywell. Salesforce looks very intriguing. Also, I'll have to look into the company a little bit more. And as always, guys, be sure to smash that like button and subscribe. It really helps out the channel and lets me know that you guys like this kind of content.